So, what if the global economy just sent out a huge warning shot and almost everybody missed it? Over the past week, a quiet but incredibly powerful signal rippled through markets all around the world. Look, it wasn't a crash, but it was a correction. It wasn't panic, but it was a moment of profound clarity. So today, we're going to decode that signal piece by piece to really understand what the market is trying to tell us.
Okay, this right here, this is the single most important idea to get your head around. What we just witnessed wasn't a system breaking down. Not at all. It was a moment of, well, collective intelligence. It's like this. Imagine a pro poker player who's been on a winning streak, and then suddenly they decide to pull a few chips off the table. They're not doing it because they're scared of losing. They're doing it because they're smart enough to reassess the entire table. That's what this was. The market getting smarter, not more fearful.
All right, so here's how we're going to break it all down. First, we'll decode that signal itself. What actually caused this sudden change in thinking. Then, we're going to follow the money and see how this risk-off mood played out in stocks and even crypto. After that, we'll see where investors ran for cover, the flight to safety. Then we'll get to the heart of it all, the high-stakes tightrope walk that central banks are on. And finally, we'll put all those pieces together to understand what this week really, truly means.
So, what exactly was this signal that the global economy sent? It wasn't one big thing, not like a single thunderclap. It was more like a perfect storm of different pressures all coming together at once, forcing everyone to just hit the pause button and take a good hard look around. And this is where it gets really interesting, because none of these things happened in a vacuum. They all fed off each other. You had these simmering geopolitical tensions creating this sort of background anxiety. And then, at the exact same time, some hotter-than-expected inflation data came out, which forced investors to suddenly question their happy predictions about quick interest rate cuts. That doubt then spilled over into currencies, and that very same caution hit the most speculative corners of the market, like crypto. It was a chain reaction, and that set the whole tone for the week. So all of that brings us to our key concept for today, repricing risk. See, for months, it felt like the markets were banking on this perfect story, that inflation would just disappear, rates would get cut smoothly, everything would be great. Repricing risk is that moment when the market wakes up and asks, yeah, but what if that perfect story doesn't actually happen? This isn't panic, it's just prudence. It is the sign of a healthy, functioning market, not a broken one.
Okay, so that's the idea. But what did this big reassessment of risk actually look like out there in the real world? This is where we see that risk-off mode kick into gear, and we see how it rippled across all these different markets.
Well, first off, the hit to stocks was everywhere. In the US, the major indexes all pulled back. In Europe, worries about trade and confidence took a bite. And in Asia, a really cautious mood took over. The key thing here is that while the system itself didn't break, this week really showed us just how paper-thin the market's confidence had become.
So what's the real difference between caution and panic? Honestly, it comes down to one word, strategy. Panic is a fire sale. It's just everything must go right now. It's emotional, it's messy. Caution, on the other hand, is like a chess move. It's a calculated, strategic retreat from certain positions to lower your overall risk. It's a thinking market, not a screaming one. And this wave of caution didn't just stop with traditional stocks. Oh no. It slammed right into the world of crypto. Bitcoin's drop wasn't because of some internal crypto drama. It fell for a very simple reason. When big investors get nervous, the first things they sell are their most speculative bets. When that global tide of optimism goes out, even the biggest digital assets can find themselves left high and dry. And look, this week gave us a pretty definitive answer to a huge, long-running debate. Is Bitcoin digital gold? Is it a safe place to hide in a storm? The market's answer this week was a resounding no. It behaved exactly like a high-growth tech stock, moving right along with the rest of the market. It didn't act like gold at all. So for right now, that makes it a risk asset, full stop.
All right, so if all this money is flowing out of risky places like stocks and crypto, you got to ask, where did it go? And that brings us to the other side of the equation, the classic flight to safety.
This table here, it really tells a fascinating story if you look closely. First up, the US dollar. Now, you'd think it would get stronger, right? That's the usual playbook. But it actually got weaker. Why? Because the uncertainty was coming from inside the house. It was centered on U.S. policy, and that tarnished its appeal. Gold, though, gold played its part perfectly, shining brighter as investors wanted something tangible. And oil was just stable, caught in a tug-of-war between worries about a slowdown and ongoing supply risks. No clear signal there. And if we look a little closer at the other currencies, the euro and the pound both went up, But don't get it twisted. That wasn't some huge vote of confidence. It was more like they were the best house on a bad block. Capital had to go somewhere as it left the dollar. Meanwhile, the Japanese yen, well, it's still stuck in its own long-term economic issues, so it couldn't really attract any of that safety-seeking money.
You know, all these jitters in the market, this big repricing of risk we've been talking about, it all tracks back to one massive source of anxiety. We finally reached the real heart of the matter, the incredibly treacherous tightrope that central banks are now being forced to walk.
And this right here is the fundamental problem, the big dilemma. Central banks, especially the U.S. Federal Reserve, are basically trapped between a rock and a hard place. If they cut interest rates too soon to try and boost the economy, they risk letting inflation, the very beast they just fought to control, come roaring back to life. But if they wait too long, if they keep rates high, they could end up choking off growth and causing a recession they might have been able to avoid.
So, which path will they choose? That right there is the multi-trillion-dollar question, isn't it? Will they focus on inflation or will they focus on growth? Every single piece of economic data is being analyzed for clues, but for now, the path forward is just foggy. And markets absolutely hate fog.
Okay, so let's pull the camera all the way back now. Let's get to the big picture. When you step away from all the daily noise, what does this week of reevaluation really tell us about where the global economy stands right now?
When you boil it all down, here's what you need to remember. First, that dream of a perfect soft landing for the economy, it's over. Markets aren't pricing that in anymore. Second, this isn't just about stocks. Risk is being reevaluated everywhere, from crypto to currencies. Third, and this is so important, the economy itself isn't broken. It's actually pretty resilient, but the confidence that's holding it all together, that is paper thin. And that leads to the final critical point. The system is now extremely vulnerable to a mistake. One wrong move by policymakers could have huge consequences.
So if there is just one single thing you take away from all of this, let it be this. This was not a week of crisis. It was a week of warning. It was the global economy sending a very clear, very direct message to investors and to leaders. The easy part is over.
And that, ultimately, leaves us with the real question as we look ahead. The issue is no longer whether our economies can grow, it's whether our leaders can navigate this new, much more dangerous landscape of risk without breaking the fragile trust that holds the entire system together. That is the real test that lies